We have been getting a lot of questions asking about what's going on with GameStop and AMC Entertainment. Tons of news out there. So I thought I would just give you some different types of perspective that we have. I'll first talk a little bit about my perspective, and then I'll also show you a clip of JP Tremblay, our investment officer, who was interviewed by Fox News and was talking about the subject. So first of all, what's going on here? So a lot of people don't recognize this, but small investors have been able to band together and have been able to act almost like an institution because they're able to take on trades as a group and move a lot of volume. And that's actually manipulating the stock market to move up or down. And there's a couple of different controversies about this, but first let me explain what has happened and then talk a little bit more about the main controversy here. The first thing is, let's take a look at this chart here. I've got a chart here of GameStop, and you could see GameStop's stock is going up here. It had a massive, dramatic increase starting in January 11th or so, and it really peaked and went really high. And you could also see the chart of AMC Entertainment, which also had a massive rise. And then you see that the stock just plummeted, right? And so as the stock rose, there was a bunch of small investors banding together, taking on Wall Street. And that created a big buying frenzy. And the reason why they did this is pretty clear because many of the large institutions, particularly hedge funds, were shorting the stock or buying put options. And what that means is they're able to profit when that particular stock goes down in value. They're betting on it going down in value further. And you could see, I'm just showing you a chart here of AMC Entertainment. This is their short interest ratio. That basically says what percentage of their shares that are the float, so to speak, that is actually short. And you can see the short interest has skyrocketed. It's been going up for quite some time. It bottomed out in July and came up really, really high. So imagine all these institutions and hedge funds on Wall Street that are short the stock. They have to buy the stock back in order to take a profit, right? And if you push the stock price up, that squeezes buying interest. And those investors, these small investors, were really seeking out to make money on a short squeeze. So that's, short squeezes have been done by institutions for decades. So this is not something new, but it seems new for another reason. And I'll talk about that. Well, first of all, it seems new because these are small investors that are making these moves, not institutions. That's the big difference here. And they're banding using internet groups, okay, like on Reddit. So the problem here is that the reason why institutions were selling this stock short is because their revenue has been declining. These business models have really been getting hurt. So this is a revenue chart. This shows the trailing 12 months percent change in revenue. So it just shows the incremental percent change. And you can see both of these stocks have been losing a lot of revenue and they're losing money. So the institutions were being rational in terms of, shorting the stock. These stocks are definitely under pressure. But the smaller investors were basically trying to do a short squeeze, which technically is being done all the time. Okay. So here's the big problem that I have with this. The big problem I have is that you basically have a situation where the short interest that was created put a lot of these small investors into the stock long. They own it. But then, so the brokerage firms changed the rules and they shut these investors out from closing their positions. But the big institutions still were able to close their positions out, which is not fair. So I think that is creating a lot of angst out there. People feel like it's unfair. They feel like the market is rigged in favor of the big institutions. And what about the small investors? So I anticipate that the SEC will take a look at this even more. They've really kind of talked that they're looking at it already, but I think that you may even see some regulations come from this. But what is different about what's happening right now is that because we have internet capabilities and communications among small investors, they can act as groups as if they were institutions. That's the big difference. And I think this is going to require some regulations in terms of market manipulation. There's already rules on the books with regard to market manipulating the market. So we'll see how this all pans out. Now I want to switch over to a interview that JP Tremblay had, our investment officer, had with Fox News.
I spoke with a DU professor who specializes in equity investments. He says all his students are talking about is if this will become a trend in the stock market. While that is possible, he doesn't believe it's the smartest way to approach investing. Some are calling it a battle between Wall Street and Main Street.
It's not for the faint of heart.
JP Tremblay, professor of finance at DU, says the stock surge of Gamestop and AMC is unlike anything he's seen since the dot-com boom.
That's all my students are talking about. This is very reminiscent of, maybe 1999 when people were quitting their job to go day trading those dot-com stocks.
The idea of small pocket investors taking on Wall Street hedge funds that bet against struggling companies may sound appealing. But Tremblay says when the rise in stock is driven solely by emotion, it could cost you.
Think about, is the company worth anything? Because it eventually probably will settle back down to some price, right? When people take their profits and the craze is over.
A few people posted on Reddit Wednesday claiming to have huge profits.
The people who are making money that everybody talks about, the person that invested $50,000 is now worth $40 million, bought those options in 2019, right? So he's playing the long game.
And he tells the problem solvers it's dangerous to look at this as a way to get rich quick.
If you're going to play in that space, don't bet more than you're willing to lose, and maybe treat it like maybe of a gamble.
The shift from traditional players on Wall Street to average investors will likely stick around. But Tremblay says the best way to get involved is by doing your research.
Understanding the risks and the hard work that should go into it. So that would be maybe one positive that comes out of that. More people need to get invested in the stock markets.
In Denver, Rachel Skida, Fox 31.